Alright, for this video I want to go through a sample form 941 for the third quarter of 2024. Now this is a continuing example where we've already filed Q1 and Q2 for this single shareholder corporation. So this is an S Corp where the sole shareholder is also the only employee, and so he has to file the 941s to report his payroll. So if you haven't seen Q1 and Q2 videos, I'll put the links in the description below. So it might be helpful to check those out first and then come back to the Q3 video. So we've got the Q3 return here. I do have one slide covering some background on the 941s and the detail on the fact pattern and how it's changed a little bit from the previous filings. And then we have an Excel workbook here showing the monthly, quarterly, and yearly projections for the compensation. But we also have another summary here showing the amounts that we have filed already for Q1, Q2, but then the changes that we're going to be making for our Q3 return. So we'll go into those in more detail. So the 941, again, this is an example for a S corporation where the sole shareholder is the only employee, right? So it's just a single owner business. He's doing all the work. So with single shareholder S Corp payrolls, the general rule here is that if the shareholder owns greater than 2% of the S Corp and they're actively participating in the business, they need to be paid reasonable compensation. Now, what's reasonable compensation varies from company to company, depends on the sector, depends on how much income and other expenses you have. There is no hardline rules to follow, so everything is just a case-by-case basis. Now, the health insurance premiums, if the S corporation is paying for the health insurance for the shareholder employee, those premiums should be included in the shareholder's wages. Now, the premiums are not subject to Social Security or Medicare tax, but they have to be considered when we look at how much federal income tax withholding should come off of their paychecks. Now, the shareholder, even though this is included in his income, he can ultimately claim the self-employed health insurance deduction on the Form 1040. So it helps zero out the amount of health insurance premiums that's being included in your Box 1 wages. Now, other filings that are often required when you have payroll, right, you need the annual Form 940 for the federal unemployment taxes, and then depending on what state you're operating in, you might need state payroll returns for wage reporting and withholding as well. And then state unemployment insurance is always something that is generally a factor as well also. And so in Florida, for example, we don't have state income tax, but we do have SUTA, so we have to file Florida state unemployment insurance returns. So let's have a look at the fact pattern here and see how this has kind of changed from Q1 and Q2. So John is the 100% owner, and he estimates his corporate profits for the year are going to be about $50,000. And so what he's done is he's set his reasonable compensation at $1,000 per month, and that doesn't include the health insurance premium, $389.26, that the company's paying on his behalf. Now, what John wants to do is kind of adjust his income a little bit, maybe towards the end of the year, right? That's what he thinks he might have to do if he wants to pay himself more because his company did better, right? Now, he's doing his third quarter Form 941 right now. He's already filed Q1 and Q2, and on his quarter 2 return, he had an overpayment of tax of $84, which he elected to have it applied to the next quarter's return. So we have to remember that if we have an overpayment like we did last quarter, we have to reflect the carry forward of that credit amount. Now, during the third quarter, John's business was slow and he was short on cash. So it was contrary to kind of how he thought things were going. So because it was slow and he was short on cash, he opted to not pay himself his monthly wage. But the S corporation did continue to pay for John's health insurance premiums. And so John wants to have that information still reflected on the return, but he also wants to have the same federal income tax withholding amount, but ultimately get a net paycheck of $0. So we're going to look at the math here and see how he can adjust things to get the same federal income tax withholding, but have a $0 paycheck and still be reporting the monthly insurance premiums. All right, so let's have a look at the workbook here. So the quarterly amounts that we've been using are the amounts here in this column. So his base compensation, $1,000 per month, so $3K for the quarter, and we're including his shareholder health insurance for $1,167.78. Now the withholding taxes here, these are the payroll taxes withheld from employee wages and the federal income tax withholding. So the Social Security amount is levied on the base compensation amount, not the shareholder health insurance, right? Remember, this is not subject to taxes. So we look at the total here, base times 6.2%, and then the same goes for the Medicare, right? 1,000 times 1.45%, and then we have the quarterly totals here. So John's regular paychecks that he's been getting for the first half of the year were these totals for the quarter, right? And he's got the other deduction there for the S Corp health insurance. And then on the bottom section here, we calculate the taxes that were applied for the employee portion, the employer portion, and then the federal income tax withholding. So for quarters 1 and 2, the numbers we used were as follows here, right? So this was the amount of total compensation, and the total amount of taxes paid were $516. Now here's how things have changed in Q3. So we've reported what we did in Q1, Q2, and now we're looking at the Q3 numbers. So remember, John's decided, I want to have a net paycheck of 0, but I still have to report the shareholder health insurance premiums, and I still want to report the same amount of federal income tax withholding. So we've been reporting 57 a quarter, so for Q1, Q2, and we want to do the same for Q3. So now the exercise is, well, if we have a net paycheck of 0, which it is showing now, how do we get to this amount with factoring these other elements in? So the question is, what should his base comp be for this quarter that's taxable by Social Security and Medicare, and then after factoring in the deductions, we get a net paycheck of 0. Well, you can go about this way using a couple of methods, but the easiest one, if you want to have a 0 paycheck, is you look at the federal withholding amount and then you divide that by 0.9235. So the reason we're doing 0.9235 is that is the difference of 1, so 100% minus the 6.2% and 1.45% of employee FICA. So if we look at the taxable wages up here, what we do is take the federal withholding of 57 divided by 0.9235. That gives us our taxable Social Security and Medicare wages. If we multiply by 6.2% for the Social Security, 1.45% for the Medicare, add up all these taxes, we're left with $61.72. And so when you subtract $61.72 from the taxable wages up there, we have our net paycheck of 0. All right, so that's the quick math, the workaround here to get to how do we find that taxable wage figure. So now when we look at Q3, what John is going to be reporting is $61.72 of comp that is subject to Social Security and Medicare. He's still including the not the self-employed, but the shareholder health insurance paid by the S Corp. And then once all the income is tallied up, all the taxes are applied, the deduction for the S Corp health insurance, we're left with a net paycheck of 0. So that's what John is going to be claiming for Q3 because he didn't want to pay himself anything. All right, and so this is how the math has been adjusted for the third quarter. Now the taxes on the employer side remain the same, right? We still have a match of the 6.2% for Social Security, the 1.45% for Medicare. So all these taxes here total up to $66.44 in payroll taxes and federal withholding that needs to be submitted to the IRS. So now that we have these values, let's go ahead and look at the return. So we've marked off quarter 3 for July, August, and September. We have the EIN, company name, and address. And in part 1, we still have just one employee listed, right? It's still just John. Now in item 2, total wages, tips, and other comp. This is that base comp amount plus the shareholder health insurance premiums, right? So in a prior quarters, we had $41.67.78, but now we've got the reduced amount of $1,229.50. and then the federal income tax withholding is the same at $57. So we've got $1,229.50, $57 of federal taxes withheld. And then on lines 5A through 5D, we report these new amounts of taxable Social Security and Medicare. So the taxable amounts are $61.72 for the year, or for the quarter, sorry. So we have $61.72 on 5A, $61.72 on 5C, and then we calculate the amount of Social Security tax, which is going to be $7.65, and the amount of taxable Medicare wages and tax, $1.79. Add these two together and we get $9.44 of payroll taxes that need to be applied, and then we add the $57 of federal withholding, and we're left with a total tax amount owed for the quarter of $66.44. Now we don't have any other adjustments for fraction of cents, sick pay, group life, so similar to the previous quarters, all of those are going to be zero, and so the total taxes after adjustments and any non-refundable credits is going to be $66.44. Now on the Q2 return, John had an overpayment. So the company had an overpayment of $84, which they elected to apply to the next period. So on line 13, we report total deposits that were made, if any, including an overpayment applied from a prior quarter. So we've got the $84 overpayment from the prior quarter. Line 13 is greater than line 12, so we don't have a balance due. We have an overpayment amount of the difference, which is $17.56. So now that we have the overpayment, we decide, okay, do we want to have it refunded to us or applied to next quarter's return? And we're simply going to do the same. So we're going to have it rolled forward to next quarter. Now on part 2, we check the appropriate box depending on what schedule of depositor we are. Our liability is less than $2,500 and none of those other requirements apply to us. So we can check the first box for we can basically submit the payment with the return. We don't have to make monthly deposits, and we're not a semi-weekly depositor either. So we check the first one. Line 12 is less than $2,500. Part 3 doesn't apply to us because we haven't closed our business and we're not a seasonal employer. In Part 4, we have continued to list John as the third-party designee. This could be another employee if he had one, or a paid tax preparer, or if he was having this submitted by a third-party payroll company, they might list one of their agents as a third-party designee. Part 5, John completes these fields, right? Print name, title, provide a date-time phone number, and then date the date the return is going to be signed and filed with the IRS, so he would go ahead and sign here as well. And the pay prepare section is left blank because John's doing this by himself. And then the form 941V payment voucher doesn't have to be submitted because we're not making a payment with the return. We actually had a refund amount, which we're rolling forward to next quarter. All right, so that covers it for Q3. I hope that was helpful. As always, I appreciate you watching, and I look forward to seeing you on the next one. Thank you.